Hey everybody, it's Michelle here. I am just waiting on Jeff. He might be running a little bit behind. Not too sure, but anyways, I wanted to hop on a little bit early just to kind of give you guys an update on the real estate market and what we're seeing and what is going on. So, in the latest couple of weeks, we have seen first of all, the weather has been beautiful for the most part. So everybody is starting to get that spring fever and the itch to start going and looking at homes and checking out, their possibilities. We're seeing activity is starting to ramp up fairly quickly. I'm receiving offers on my listings that have been fairly stagnant for a little while now. So, and lots of showings are booked. So we are seeing an increase in activity within the market. Today, the Bank of Canada will do a rate announcement in about 43 minutes. And so he just texted me, sorry. So the Bank of Canada is going to make the rate announcement. I think a lot of speculations are that it's going to be held at the rate that we're currently at. It would be great if they made that rate reduction because that means that affordability for buyers goes up. And obviously, with a lower interest rate, you're paying lower interest over the long term. And so anyone who is held at a specific rate right now at a previous rate, if the rate does go down, then you can reapprove for the new rate. And that's going to help benefit you once you're getting set up with your new home and your mortgage. Sorry, I'm not used to doing this by myself. Jeff is usually beside me, giving me some information on the mortgage side of things. So basically, my predictions and my thoughts right now for the market is today, if the rates go down, I think that a lot of people will, do that reapproval, increase their affordability by a slight amount. I'm sure it's not going to be huge, but it will be increased. And I think a lot of people will just decide to start shopping for homes. And so usually when that happens, it means that everybody decides that the floodgates open, everybody goes and decides that now is the time to buy, and therefore prices usually go up, home prices usually go up, and it becomes more geared towards the seller's market because there's more buyers, or there's more buyers out there than there are listings. So essentially, if they hold the rate, I would still make a strong suggestion for you to make a move as soon as you can instead of waiting. Because if they do make a rate adjustment and reduce the rates, then your competition has just increased as well. So you're going to be up against more people because more people will now be able to afford the same thing you can. And there'll just be more competition, and the prices will then get inflated a bit because of that situation. So hoping that Jeff can hop on and chat with us about what he is seeing on the mortgage side of things. I do have a couple of specific questions for him in regards to the mortgage side of things. If you guys I do have a live stream. This is live stream. So if you guys have questions, pop into the comments below and ask me your questions, because I'm here to answer anything that I can for you. If you have something specific, I'll give an example of looking at a community as from a larger scale to to a neighborhood. So I went on a listing presentation yesterday, and when you look at the community kind of as a whole, it showed that it was a balanced market. The balance showing that there's a fair an equal amount of buyers and sellers. Therefore, there's it's not skewed one way or another. And there was about I think 5 months of inventory roughly. But then when we laser focus down into the specific neighborhood that they were in, the inventory was actually 2.1 months, which is a lot less than 5, which then when you look at those numbers, it showed that it was a seller's market in that particular area. So when you're looking at the statistics and the numbers, and say for example you live in Belleville, and you're like, oh, okay, well the Belleville stats say it's a buyer's market or a seller's market or whatever, and therefore you just make that assumption that that's the market that you're in. But in reality, you could specifically, if you're in Thurlow, or if you were right in town, or it's going to differ, and it's going to be very different specifically for where you are. So you want to make sure that you're paying attention to where you are or where you're looking to purchase, because it could be slightly different than the big picture. And I know that when we look at all these Canadian and Ontario stats and all that stuff, that's the big picture. That's not specifically where you necessarily live. So you want to be more specific with that. So here's Jeff. I'm just going to pop him in. Hey, Jeff.
Hello, how are you?
I'm good. How are you?
I'm good, thank you.
So we are live. I've been live for a few minutes now. I'm just kind of giving everybody an update on the real estate market and the activity that we're seeing and that kind of thing. Obviously, the warmer weather is bringing out, the buyers, and they're excited to start looking at homes now that there's no snow and that kind of thing. What are you seeing?
Oh, pretty much the exact same. We're seeing a flurry of buyers really jumping back into the market. The amount of purchases that we've had this year compared to the same time last year we're like threefold. So. Which I'm sure has a lot to do with what's going on with the interest rates. Like even a year ago, interest rates were high and projected to continue to increase, which is what happened. And now they have dropped quite a bit and are projected to decrease. So when that happens, affordability increases for everybody. It makes those mortgage payments look a little more reasonable, and allows and excites buyers to get back into the market.
For sure. Well, for example, I found it really interesting because I don't usually get into numbers with my clients, but we recently did a deal with my brother, and he purchased a home, and he purchased for significantly less than what we bought this house for. And his mortgage payment is actually more than what our mortgage payment is on this house. So it just gave me perspective on like, wow, it really is a lot different than it was back in 2020 with, affordability
when money was free back in
basically
they were like giving it away.
Yes.
The lowest interest rate we got was 0.99%.
Wow, that is so low.
It was amazing.
1.84 was good. 0.99.
That is a great, that's like a phenomenal rate. Anything under 2%, you're essentially getting free money.
Yeah, that's crazy. So, and it's funny because I was just in Arizona at a conference, and the group that I'm with is primarily American, and realtors and mortgage lenders, loan officers as they call themselves, and it's so different. Their their real estate and their loans and ours, like with their 30-year loans, I was like, okay, I'm sorry, I'm trying to understand this. It's you've locked in your mortgage for 30 years. Like, so like if somebody locked in at 0.99%, they have that for 30 years.
Yeah.
And I'm like, what?
It's literally, that's exactly how it is. So we have terms. We have like a max of a 10-year term, but most people do a 3, 4, 5 year. With a 30-year amortization. They have 30-year term mortgages. But
bonkers.
It is bonkers, but the amount of people who actually stay with their interest rate for the entire 30 years is like less than 10%. Everyone's going
Yeah.
to refinance, pull out equity, play with that, and then they're subject to new rates at that time.
Yeah.
That's why too, like when you're comparing Canadian interest rates to American interest rates, Canadian interest rates look a lot better on paper. US interest rates are always a little bit higher because banks and lenders are securing themselves because they're offering this rate for such a long period of time.
Right. I
Yeah,
think that's crazy. But I mean, it's good. But then I understand the housing crisis in a sense, because if these people all locked in at 0.99 or 2 or whatever, I mean, when you're looking at it from a long-term standpoint, it's like we might as well stay. Like
might as
if
well
we're in a
say,
financial position, you might as well stay because it's just going to help you get through, especially when
100%.
affordability and everything has gone crazy high, right?
Yeah, yeah, for sure. No, it's what a different world the US and Canada is when it comes
Oh,
to housing. We still have the same issues. There's
yeah,
not enough housing being built, a lot of newcomers to Canada. Like it's a challenge.
yeah. I actually did have somebody ask me a question when I was at that conference, and I actually didn't know the answer. And I was going to text you, and I was like, no, this is actually really good to talk to on our call because, I mean, this is learning for me. And I think it's probably a lot of people probably haven't even thought about this question. And I know I have never. And I'm like, how did I not ever think of this? So we're looking at a lot of mortgages coming for renewal in the next couple of years, like tons and tons and tons. What happens if you like don't renew? Like, can you not renew? Like, what happens?
Yeah, you kind of have a few options. So every lender is going to do something a little bit different. So
Okay.
what most lenders will do is let's say you get a letter from the lender 4 months out from your renewal date. You're on vacation for 6 months. You don't get it. Forget about your renewal. What the
Mhm.
heck happens? Some lenders will then every lender again is different, but you will typically automatically renew into either an open term mortgage where you can leave at any time if you want, or you renew into like a 6 month closed mortgage where you're paying a penalty to leave. But yeah, the lender has the right to maintain that mortgage if you're not providing them with any answer or not signing anything. You automatically renew. You don't have to show any documents as long as your mortgage is in good standing.
Right. Now, when they do that automatic renewal, it's obviously not at the same rate, right?
Nope. So if you're auto renewing, you are probably in today's market, you're probably auto renewing at like 9%.
Whew.
Yeah. If you do nothing, it's probably going to be somewhere around 9, maybe 8, maybe 10, depending on the lender. So however, here's a little strategy tip.
Okay.
I worked with clients in January when rates were coming down. Like we saw the trajectory, they were coming down. So we had clients renewing at the end of January, and we kind of played some strategy. They wanted a certain number. For whatever reason, they just wanted a certain rate. Once they hit, it was like 509. Once they got 509 for a 3-year term, they were happy. So rates were not there at the time. They were at like 5.5. And we said, like, here are the options. If you want that rate, like if you just want that rate, your options are 1, you're not going to get it, or 2, renew into an open term mortgage. And if you think that rates are going to continue to decrease, great. You'll eventually, they probably will come down to that 509. But in the interim, you're paying your 9.5%, or in this case, it was like $230 a day.
Whew.
So the rate that we had for them was like essentially, I don't know how to explain this quickly. We had them at a mortgage payment of like, let's say $2,000. The 509 would have got them at like $1,750. So it was $250 a month difference, which is great. However, these clients were spending $250 a day to try to get that interest rate. So it took a little bit of education. So anyways, they were happy. They got close enough that it made sense.
Yeah.
There's some like
See,
strategies at time of renewal.
yeah, and I didn't even know that. So, I mean, I've been in this a decade. Maybe I should know, but then there's a point in which I feel like there's the mortgage guy or girl that's their forte and real estate is my forte. So I don't always take the time to, get into the details of this stuff. I have a general idea,
It's
general
just
understanding.
it's the exact same, like when clients will call and be like, "Hey, do you think this house is worth this? Or what do you think about this condition? What do you think about doing it with like a escape clause condition?" I was like, "Hey, yes, you know who's a great person to answer that? Your realtor."
Not me.
Yeah, not me. Uh,
Yeah.
so, anyways, it's very similar. Yeah, just like sticking in our field is, yeah, I'm with you.
So, just quickly then, can you, if it's easy to summarize, what an open term mortgage is and then a 6-month closed mortgage is?
Yeah, open term, like a 6-month open term or a 6-month closed term.
Okay.
Some lenders will auto renew into like a 1-year fixed, which is like, really not favorable.
Okay.
But really, like clients will always be presented with options at time of renewal, which is why I know you set this out to your database. Like we just keep seeing clients get not favorable rates at renewal time. So we're like, hey, we win renewal rates every single time. So we put a guarantee that if a client comes with a renewal offer that is better than what we can get them, we'll give them $100.
Yeah.
Go to Tim's for 2 months, or go to Starbucks for a day, and $100.
Yeah. Yeah, I know. I think that's great because, and I'm constantly educating my buyers and sellers with, oh yeah, I have so and so at the bank. They're going to take care of us. And I'm like, okay, that's great. I'm happy for you. But have you like extended your options? Like, have you looked at other options, because you don't know what you don't know. And so if they're offering you, like, I'm just throwing numbers, 6%, and you can offer them 5.5 or 5. I mean, that is significant savings over the course of 5 years, 3 years, whatever.
Yeah.
That it's silly for them not to be looking at other options,
Yeah.
right? Like,
The hard part, the challenging part, I would say, with renewals is that you still have to, unless you're staying with your same lender who's offering, let's say, the 6%, you do have to requalify. So for a lot of clients, because interest rates have increased, maybe they've taken on or accumulated more debt, maybe something's happened with work and they can't requalify, then hey, the great news is that you can still sign with your lender. So you can still re-sign there. You don't have to requalify. So
is that typical for all mortgage renewals? Like, if you renew with your current lender, they will not require you to requalify.
Yeah, you literally are just, excuse me, you're signing a piece of paper. That is it, which is a really appealing aspect of renewals. And that's why it's like 47% of Canadians will just sign that piece of paper, not negotiate rate, not look at different terms, just signing. And 53% of Canadians are at least exploring alternatives to their current lender.
Which they really, really should, because I mean, when you're excellent when it comes to the math part of things. Like, you're the spreadsheet guy who plugs in all the numbers and says, here's this scenario and here's that scenario. You can make your decision, but it's clear to you. You can see how much, it's going to save you or whatever, right?
Radical transparency. That's my motto, at least, just being open. But I do want to switch gears for a quick second.
Sure.
Okay, we're 4 minutes past 10 o'clock. So just some breaking news.
Okay.
The Bank of Canada held interest rates this morning.
Okay.
So,
which is kind of what everybody expected, I think, right?
Yeah.
Okay. So that's good. I mean, I think that buyers need to realize now that you either are going to buy in this market or you're going to kind of miss out come, is it June or July, the next one?
Oh, the next one's in April. We got April and June, yeah.
Okay. Yeah, so then, I mean, I was explaining before you jumped on the call, how now would be the time, because as soon as interest rates drop, affordability goes up, buyers come out of the floodgates, and prices of homes go up.
Yeah, it's an interesting announcement right now too. Like, they're kind of saying the Bank of Canada doesn't know what they're going to do. So a lot of people are predicting like in June, this might be the first rate cut, which would be lovely. But even like the Bank of Canada in their quick announcement, they're saying like, hey, we're not saying anything. We're continuing quantitative tightening. Like, inflation numbers are coming in okay.
They're being a little bit wishy-washy.
Oh, 100%. Yeah. It's pretty wild that it's been, today is 735 days since the first rate hike,
Wow.
which is wild. So we've been in like an upward trend since that point, and now over the past few months, we're starting to see the Bank of Canada say something a little bit different, which will hopefully result in a lot of savings for clients down the line.
Yeah. So when we look at this trend, and obviously you and I both, we do not have that crystal ball to know exactly what's going to happen. But with the way that the trends look, and I guess our gut feel is, in the coming several months and maybe even year, when people locked in at those COVID interest rates like we did, 1.84, when we come full circle to that 5-year mark and say December of next year, not this year, but 2025,
Wow.
we should see rates be significantly lower. I think
Yeah,
that's what I
like,
think, but
well, I'm with you for sure. Like if we had this conversation, well, we probably did, but 3 or 4 months ago,
yep.
rates were all like in the 6% range, everything. And we were already down into like high fours, low fives. So we're
Hmm.
already seeing a pretty drastic cut in 3 or 4 months.
Hmm.
And the expectation is that it's probably not going to continue at that speed. But the expectation is we've reached the peak, and now
Hmm.
we're just hovering on the top for a little bit, and hopefully we'll start to
Yeah.
go over on the other side of the mountain shortly.
And then, I mean, historically, when we look at things like this happen, this is kind of how it visually looks, right? So I think we ought to be optimistic about the future, but at the same token, I know there's a lot of millennials even specifically out there that are pissed that they didn't get into the market 5 years ago. However, 5 years ago, there was people pissed they didn't buy 5 years ago,
Yeah.
right? So, I mean, like that's a clear indication that it's a good time to buy regardless. If you can afford to get into the market, or 5 years from now you're going to be saying I wish that 5 years ago. Right?
My favorite phone call to get is it's always the same. It's a lot of first time home buyers. Oops, where'd you go? There we go. A lot of first time home buyers who will call me, or I usually call clients about 3-4 weeks after closing, after they like purchase a property and live in there. And the conversation always goes the same. Oh, like initially it was like, Jeff, I was so scared to spend an extra 5, 10, 15, $20,000 on this property. But guess what? My neighbor just listed at this price and sold for like way higher than what we bought at. I was like, yeah, that's kind
Yeah.
of the trend. Guess what? You set the bar, and
Yeah.
now most sales are probably going to come in on top of yours, which always makes clients feel amazing. Already
Exactly,
see
right? Yeah,
instant
like
appreciation.
yeah, and that's exactly right, and that's the thing, like, no, your neighbors aren't necessarily the same home as you, but they kind of are forming a foundation to say, you know, homes like this are worth this, but now that interest rates are lower, people can afford more, therefore it's worth more because there's more buyers out there shopping and willing to pay because they want to get into the house.
Yeah.
So,
And
and I
southern market, like it's just kind of it's a good time. I know I hate saying that.
It's
I-
particular to your specific situation because everybody's
yes,
scenarios are different,
yeah,
right? So
yeah.
maybe it's a really shitty time for you to buy or sell, and it really just depends on your current situation. Like, for example, us, not a good time to buy or sell. We're locked in at 1.84. Why would we? Unless we absolutely had to, financially, it's not very smart.
And like what I focus on instead of it's a great time to buy is like, hey, these are what your monthly payments are today versus what they would have been versus what they might be in the future. Like if
Yep,
you're good with those monthly payments or biweekly payments, great. It's a good time to buy. If
exactly.
those are still kind of out of the realm of possibility for you, not a good time to buy right now.
Yeah, exactly. And that's the thing. And you need professionals like yourself and myself, side by beside them, telling them and helping them to understand perspective and understand the process, because it's not as though they do this every day and probably aren't up to par with all of the mortgage stuff and all that kind of thing. I'm just having a moment where I'm remembering the Bank of Canada or CMHC, did they not just end the first-time homebuyer thing?
Yeah, so it's interesting. I think the headline reads a lot scarier than the reality.
Okay.
Headline is CMHC ends first-time homebuyer incentive, which everyone's like, wait, like, what the heck? My RSP, I can't get the land transfer tax rebate back. Like all that is not moving anywhere. The only it was a failed program that started a few years ago, where essentially, if you did not have enough down payment to purchase a property, the government would lend you, kind of match your down payment up to 10%. So if you had 5% for a down payment, the government said, "Hey, here's another 5%. Have fun, go buy your property, and when you sell, we're going to take a percentage of the profit from the sale of your property." So the government owned part of your home.
Yeah.
And it's a very, very unpopular product for reasons that is pretty evident.
Yeah.
So they just ended it. But that's the only thing that really changes. It was it was something like 7% of people who applied for it actually received the funding, and like it was just very, not
wasn't very successful then.
Not successful. Didn't help people get in. Yeah.
But with regards to some other incentives, so the land transfer tax, does that still apply?
Yeah, 100%. So first-time home buyers will get a rebate up to depends, like up to like $4,000 towards their land transfer tax.
Okay.
And they also have the ability, first-time home buyers can pull money from their RRSP to use towards a down payment. That money does need to be repaid within 15 years. So if you're pulling out $15,000, you got to pay back over the next 15 years. You got to pay back, let's say $1,000 a year.
Right.
There's like the new FHSA program, the First Home Savings
Account. I was just gonna say that. Yeah.
So that's an amazing program. I would take any first-time home buyer. It's
even open it. It's like open it right now. If you know that you're going to buy in the next 5 years, open this bank account right now. Like, don't be silly.
Yeah. Questrade has it. Like, it doesn't have to be with the bank. It can be anywhere. Throw $8,000 into it, and you're just getting a tax write-off. We missed the time to do it for 2023, but that's all right.
Yeah, very good. I think that in itself is a golden nugget that a lot of people don't understand or don't even know about or whatever, that I think is that so key that like it's silly for them to not open that account. And that's called the
FHSA, the First Home Savings Account. Pretty much what's going to happen, you put $8,000 into it. Whether you use it or not, you still grow. It's an investment.
Mm-hmm.
You pull it from your TFSA and put it into your FHSA. So maybe you're just like moving money around. But by putting $8,000 into it, you're going to get taxed $8,000 less on your income. You're probably going to get a tax return of a few $1,000 depending on your income level. Pretty nice.
Yeah. So all the people that are watching this, that watch till the end, this is your golden nugget gift from us.
Yeah. Awesome.
Is there anything else you want to touch on, or?
I think I have to do a full read through of the Bank of Canada policy announcement, but the fact that they're holding and just the headlines are pretty clear that they're not giving anything away for the next few months, but keep an eye on it. It's not going to affect when they drop. It's not going to affect as many people as one might think. Most clients are in fixed rate mortgages, but keep exploring, keep talking to Michelle, and if you need anything,
we'll do this again next month. And we are going to, we just have not organized it yet, but we are going to do a couple of workshops for those of you who do have mortgage renewals coming up in the next year or two, just to help kind of guide you through the process and kind of prepare yourself for this. Although you may not be renewing like in the next month or two, and if you are, it's going to be beneficial to you in this same token. But we want to be here as a resource to you to help you make the best decisions for your real estate journey, mortgage journey, that kind of thing. So we're here to help you in any way that we can. So please reach out to us, and they can reach us on socials, The Most Referred Realtor. You guys know where to find me. And Jeff, what's the best way to reach you?
Oh, you can go to chatwithjeff.ca, and I think that's probably the best way to get in touch.
Perfect. Yeah. All right. Well, we'll see you next month.
Thanks, Michelle.
Awesome. Thanks, Jeff. Bye-bye.